Every empire begins with ambition, but ambition costs money. In the ancient world, gold was the blood that flowed through the veins of power. Armies didn't march on patriotism, they marched on pate. From the moment the first city-state dreamed of conquest, war and finance became inseparable. The roots of war finance stretched back over 4,000 years. In Mesopotamia, temple accountants carved cuneiform records of loans and taxes on clay tablets. When kings went to war, they borrowed grain and silver from temples, promising repayment with the spoils of victory. The world's first wars were financed not by treasure, but by credit. Egypt's wars were financed by the Nile itself. When pharaohs expanded their borders, they paid soldiers and craftsmen with grain credits, a primitive form of currency. Victory brought tribute, gold, slaves, and crops. Defeat meant debt to neighboring kingdoms. For Egypt, every battle was a financial gamble against the gods. Then came Greece, and a new idea: citizens financing war through investment. City-states like Athens built fleets using loans from wealthy merchants, promising repayment through captured trade routes. This was more than patriotism, it was profit. War had become a business opportunity. Rome perfected the art of debt-financed conquest. Wars were funded through public contracts, private lenders, and taxes from conquered lands. When soldiers returned victorious, Rome paid its debts with plunder, gold, land, and slaves. Each campaign was a financial cycle: borrow, conquer, repay, repeat. Empire itself became a self-sustaining investment machine. As empires grew, so did their debts. Rome's wars became so vast that private lenders couldn't cover the cost. The state began issuing promissory notes, the ancestors of government bonds. In essence, the empire promised to repay citizens with future taxes, turning war into a national investment. But even the mightiest machine of conquest can collapse under its own weight. As wars dragged on, tax revenues fell, and debts multiplied. Rome debased its currency, mixing silver with base metals to stretch its finances. Inflation soared, soldiers demanded more pay, and confidence vanished. The empire that had financed the world fell, bankrupted by its own ambition. History's first empires revealed a simple pattern: debt fuels expansion. Expansion demands more debt. As long as victories continue, the loop holds. But when wars fail or revenues stop, the system implodes. This cycle, the debt-expansion loop, became the template for every empire that followed. Even after Rome's fall, its financial DNA survived. Medieval kings, popes, and crusaders borrowed from bankers to wage wars. The Crusades were funded not only by faith but by credit. Rome's system of financial warfare lived on, reborn in Europe's vaults and ledgers. From Mesopotamia to Rome, the lesson is clear. Every empire is built not just on soldiers and steel, but on debt, contracts, and belief in repayment. War is never free. It is financed, repaid, and reinvested. And this pattern, born in clay, refined in gold, and written in blood, would define the next 1,000 years of human history. The fall of Rome left a vacuum not just of power, but of credit. For centuries, Europe stumbled through chaos, wars, and plagues. But out of that darkness came a new empire, one not built on swords or soldiers, but on ledgers. The Renaissance didn't just awaken art and science, it awakened money itself. Florence became the financial capital of the 15th century. Families like the Medici transformed lending into an art form. They financed kings, popes, and armies, all through meticulous double-entry bookkeeping. Their power came not from swords but signatures. The pen had become mightier than the sword, quite literally. Even the Vatican learned the value of debt. Popes borrowed vast sums from Florentine bankers to fund crusades and cathedral projects. Faith itself was financed. Each marble column of St. Peter's Basilica carried the weight of borrowed gold. Religion and finance had merged, creating a divine economy of war and redemption. While Florence invented banking, Venice weaponized it. The Venetian Republic created state bonds called prestiti to fund its naval wars. Citizens invested in these bonds, betting on the Republic's survival. When Venice won, investors profited. When it lost, they lost everything. It was democracy through debt, centuries before Wall Street. As wars expanded, so did trade routes. Merchants financed fleets, fleets conquered colonies, and colonies brought back gold and spices. Debt financed exploration, and exploration repaid debt. The financial loop had turned global. The world itself had become collateral. Spain seemed unstoppable. Its conquests in the Americas poured oceans of silver into Europe. But the flood of bullion led to inflation, not prosperity. Prices soared, wages stagnated, and debts multiplied. Spain discovered a bitter truth: you can conquer gold, but you can't conquer debt. In the 1600s, the Dutch Republic redefined empire once again. They built a financial system where power rested not in monarchs but in markets. The Amsterdam Exchange became the world's first true stock market. For the first time, investors could own shares of war, funding naval battles in return for dividends. The age of corporate warfare had begun. The British East India Company took the Dutch model and expanded it across continents. It raised money through public bonds and private shares to fund its own armies. For the first time, a corporation could wage war, sign treaties, and rule nations. The line between business and empire vanished. By the 18th century, bankers and merchants had replaced monarchs as the true rulers of the world. Wars were fought not just for land or faith but for profit margins. Loans, interest, and investment dictated strategy. Empires no longer conquered with swords alone, they conquered with spreadsheets. The Renaissance gave birth to a new empire, one without borders, banners, or kings. Its armies were accountants, its generals, financiers. This invisible empire would soon fund revolutions, colonize continents, and shape modern capitalism. It was the beginning of a global order built not on territory, but on trust, credit, and debt. The bond markets of the Renaissance would evolve into the financial weapons of the modern world. As the 18th century dawned, Britain was no longer just a kingdom, it was becoming a machine of finance. Its power didn't lie in its population or its landmass, but in its creditworthiness. The British Empire was built on trust, the trust of investors, merchants and bankers who believed that Britain would always repay its debts, and that trust became its greatest weapon. In 1694, the Bank of England was founded not as a royal treasury, but as a public-private partnership. Its purpose, to fund a war against France. Investors loaned money to the crown in exchange for bonds, and in return, they gained influence over national policy. The bank became the heart of Britain's financial empire, a central nervous system that connected war, trade, and governance. Every war Britain fought in the 18th century against France, Spain, or the Dutch was financed, not fought, first. The bond market decided which wars could be waged and for how long. In effect, the City of London became Britain's second capital, where victory was traded as a financial asset. Wars were no longer national decisions. They were business ventures. Britain discovered a revolutionary idea. It didn't have to repay its debts, only maintain them. Through Consols perpetual bonds, the government could borrow money indefinitely, paying only interest. Debt became sustainable, even profitable. While other empires collapsed under debt, Britain thrived on it. It was the first nation to master debt as an instrument of empire. The City of London evolved into the command center of global finance. Brokers, bankers, insurers, all working in symphony to fund wars, ships, and colonies. Institutions like Lloyd's of London ensured trade routes that stretched from India to the Caribbean. Money flowed like a tide in and out and back again, always finding its way home to Britain. During the Napoleonic Wars, Britain faced an existential threat, a Europe united under France. But while Napoleon marched on land, Britain fought with credit. London's bond market financed coalitions across Europe, funding allies from Spain to Prussia. When Napoleon's empire collapsed, Britain's balance sheet stood stronger than ever. The war had made London the undisputed financial capital of the world. Britain's global empire was not simply ruled, it was leveraged. Colonies borrowed from London banks to build infrastructure, buy goods, and maintain armies. Debt tied the colonies to the empire tighter than any chain or treaty could. Even independence didn't always bring financial freedom. Debt replaced domination. With the 19th century came machines, steam, and iron, but behind them all was credit. Factories were financed, railways underwritten, and new cities born through capital raised in London. Debt had turned into development. Britain didn't just export goods anymore, it exported financial systems. By the late 1800s, Britain's most powerful export wasn't coal, or textiles, or ships, it was the pound sterling. Nations everywhere held reserves in British currency, traded through British banks, and borrowed under British law. Britain ruled not by occupation, but by obligation. The world had entered the sterling age, an invisible empire built on trust, balance sheets, and compound interest. By mastering debt, Britain created a new model of empire, one that could survive wars, revolutions, and recessions. Its genius lay not in conquest, but in continuity. When the sun finally set on the British Empire, its financial system lived on, reborn in Wall Street, the IMF, and central banks worldwide. Britain had shown the world that money, not military, is the true measure of empire. When the United States declared independence in 1776, it was already drowning in debt. The Continental Congress had printed money to fund the war, and inflation ran wild. But the founders understood something vital. Freedom meant nothing without financial credibility. From the beginning, America was built not just on liberty but on liabilities. In 1790, Treasury Secretary Alexander Hamilton proposed a radical idea. The new federal government would assume all state debts and issue national bonds. This transformed America from a fragile union into a credible borrower. Hamilton didn't just build a treasury, he built trust. He understood that a nation's true currency isn't gold, it's belief in its promise to repay. In 1792, 24 brokers met under a buttonwood tree in New York and signed an agreement, the foundation of the New York Stock Exchange. What began as a marketplace for government bonds soon became the engine of American capitalism. Investors traded debt like gold, and Wall Street became the spiritual successor to the City of London. By the 1860s, the United States was once again at war, this time with itself. To finance the Civil War, the Union issued war bonds to the public. Citizens didn't just support the army, they invested in it. It was democracy's first mass financial mobilization. In the fires of war, the bond market became the backbone of national unity. In 1913, the Federal Reserve was born, an institution that would quietly shape the entire global economy. It centralized banking, stabilized interest rates, and gave Washington the power to print money in times of crisis. The Fed became the engine room of American finance, controlling the levers of inflation, credit, and confidence. When World War I broke out, America didn't just send soldiers, it sent bonds. Through massive propaganda campaigns, the government sold Liberty bonds to millions of citizens. Posters showed Lady Liberty, urging Americans to invest in victory. It was genius, a patriotic act, and a financial transaction rolled into one. War had become a product, and debt its currency. The roaring 1920s turned into the shattered 1930s. Banks collapsed, markets evaporated, and faith in finance nearly died. But instead of abandoning the system, America reinvented it through regulation, social safety nets, and central planning. The New Deal wasn't just political reform, it was a re-engineering of capitalism itself. When the Second World War erupted, America's greatest weapon wasn't the atomic bomb, it was the savings bond. Over 85 million Americans invested in victory bonds, raising more than $185 billion. It united the nation, funded the war, and transformed citizens into creditors of the state. The power of collective finance had reached its peak. In 1944, as the world burned, 44 nations met in a small New Hampshire hotel to design a new global system. The Bretton Woods Agreement made the US dollar the anchor of international finance, backed by gold and American power. The age of the pound was over. From now on, global trade would flow through Washington and Wall Street. By the mid-20th century, the United States had achieved what no empire ever had, a global network of allies, all bound not by conquest, but by credit. Its debts were held as wealth by other nations. Its currency became the oxygen of world trade. Through bonds and belief, America had turned finance into foreign policy and debt into dominance. In 1971, President Richard Nixon made a decision that changed the world. He ended the gold standard, severing the dollar's tie to gold. For the first time, U.S. currency was backed by nothing but trust. But soon, America found a new foundation for its empire: oil. The black gold that fueled modern civilization would now also fuel global finance. In 1973, the Arab oil embargo sent shockwaves across the world. Gas prices quadrupled, economies crashed, and Western nations realized their greatest vulnerability: energy. But within crisis lay opportunity. The U.S. began crafting a secret alliance with Saudi Arabia, an agreement that would link oil to the dollar forever. In 1974, Washington and Riyadh struck a historic deal. Saudi Arabia would sell oil only in U.S. dollars, and in return, America would provide military protection and invest in the kingdom. Every barrel of oil sold worldwide would require dollars, forcing every nation to hold us reserves. It was genius. Energy demand became dollar demand. As oil prices soared, petrodollars flooded into global markets. Saudi Arabia and other producers deposited their surplus dollars into US and European banks, which then lent that money to developing nations. This petrodollar recycling created a cycle where oil wealth funded debt and debt sustained demand. The dollar's dominance deepened with every barrel sold. By the 1980s, Wall Street had found its new frontier: commodities and energy finance. Banks, hedge funds, and traders turned oil futures into billion-dollar markets. From Goldman Sachs to JP Morgan, financial giants controlled not just money but the very fuel that powered civilization. Speculation became policy. Energy became economics. The petrodollar system had an unintended consequence: debt. Developing nations borrowed heavily from Western banks using recycled oil money. When U.S. interest rates soared in the 1980s, repayment became impossible. Countries from Mexico to Argentina defaulted, triggering the Third World Debt Crisis. Global inequality became a structural feature, not a flaw. To stabilize collapsing economies, the International Monetary Fund (IMF) stepped in, offering loans in exchange for strict austerity policies. Behind the scenes, this ensured nations remained dependent on the dollar system. Debt became a tool of diplomacy. The empire no longer needed armies, it had institutions. While the dollar ruled financially, America's military guaranteed its dominance. From the Persian Gulf to Kuwait and Iraq, wars were fought not just for freedom, but for the stability of the oil trade. Each intervention reinforced the petrodollar system. Every conflict sent a message: the dollar is power, and power enforces the dollar. As the 21st century unfolded, rivals emerged. China began buying oil in yuan. Russia pushed for trade in rubles and gold, and new alliances like BRICS questioned dollar hegemony. Yet, even in resistance, nations still held us debt, a paradox of dependence. The petrodollar's foundation trembled, but its architecture endured. The petrodollar was more than a financial system, it was the hidden operating system of globalization. Every tank of gas, every flight, every shipment of goods was a small act of tribute to the dollar empire. But every empire built on consumption faces the same fate. The moment the world stops buying, the the system begins to crack. The question now is not whether the dollar can survive, but what replaces it when it doesn't. Empires once wielded swords, cannons, and ships. Today, the most powerful arsenal is numbers on a balance sheet. Debt, bonds, sanctions, and interest rates are the weapons of modern dominance. Financial warfare can topple governments without firing a single bullet, and the blueprint traces back millennia from Rome to Wall Street. By the 21st century, governments no longer borrowed only from citizens, they borrowed globally. Sovereign bonds allowed nations to raise trillions, while investors bet on their survival. Default became a political weapon. Debt itself had become a geopolitical tool, capable of coercion and control without invasion. In 2008, the world witnessed the power of finance unleashed. A housing bubble in the United States triggered a global collapse. Banks fell, currencies wavered, and governments were forced to bail out their own economies and others. The crisis wasn't fought with tanks. It was fought with liquidity, interest rates, and central bank interventions. Financial warfare had entered a new era. Central banks responded with quantitative easing, creating trillions in digital currency. By controlling the supply of money, governments could manipulate entire economies. Credit became power. Interest rates became instruments of influence. Debt could now be wielded globally, silently, invisibly, instantly. Today, nations impose financial sanctions as a first line of attack, freeze assets, restrict trade, deny access to global banking. Without firing a shot, a country can be crippled. Debt and currency have become weapons more precise than missiles. Emerging powers are testing the system. China promotes the yuan in global trade. Russia experiments with gold-backed currency. Countries seek alternatives to the dollar, attempting to bypass US influence. The age of financial warfare is no longer one-sided. Globalization means every move is contested in markets, not battlefields. Multinational corporations now operate like sovereign entities. Tech giants, energy conglomerates, and financial firms hold power rivaling nations. They influence policy, fund conflicts, and shape trade. Debt, credit, and investment have become tools of corporate empire as much as government. The 21st century may see a new battlefield: digital currency. Cryptocurrencies promise decentralization, while central bank digital currencies, CBDCs, promise control. Money itself is evolving into programmable power. Whoever controls the ledger may control the next era of empire. From Mesopotamia to Rome, Florence to London, and Washington to Wall Street, one lesson stands clear. Debt is the ultimate weapon. Every empire that mastered credit could fund armies, conquer nations, and endure crises. Every empire that ignored it fell. Finance has always been the invisible battlefield, and it always will be. Today, the world stands on a knife's edge. Debt, bonds, and credit networks determine wealth, security, and influence. The tools of empire are no longer obvious, but their power is absolute. As nations, corporations, and digital currencies compete, one truth remains: the art of financial warfare is eternal, and the empires of tomorrow will rise or fall on the balance sheet.